Well, hello again. We're back for another in our series of Meet the Managers. We had different topic with every manager that we meet, and we're doing a different one again today. I'm very pleased to be joined by Ilian from EMF. Ilian, do you want to introduce yourself and say hello?
Mark, thank you, and good to see you again. So my name is Ilian Illiev. I'm Managing Director of EMV Capital, a venture capital and EIS investor, and also CEO of Net Scientific PLC, AIM-listed company which recently acquired EMV Capital.
So more than one hat in that sense. So it sounds like you're a busy man.
It's been a really busy year for us. So it's yeah, good times.
And that's probably a good place to start. I know it's been an interesting year for everyone, but particularly interesting year in the small cap space. So how have you guys at EMV reacted to the market and what's happening at the moment?
Well, I mean, as with many of our peers and colleagues, right about this time last year, or maybe a little bit earlier, we had a team meeting and okay, is this the end of the world? Is the zombie apocalypse? And we decided, well, no, obviously we had to think of how to implement the remote working aspects. But in order of priority, point one was, basically how do we work together and how to keep the team together and with the different working conditions. But importantly, quite quickly, we switched to looking at the portfolio companies and helping them develop strategies to deal with the changes in circumstance. Of course, they were all affected in one or another way. We had a fundraise that had to be frozen because the markets froze. For others, the sales pipeline just got pushed back significantly. And of course, this time last year, it just wasn't clear what would happen. But overall, the portfolio has dealt quite well. We've had a number of transactions that took place after the first lockdown, and most of them have been at an increased valuation. And I'm happy to say that some of them have also managed to accelerate the development. So overall, it's been a positive year both for our team and the portfolio. Of course, those with kids have gone a little bit crazy, and those without kids living in small places have also had a tough time. But overall, I think we've come out stronger, and in many ways, being forced to work in this way has made us take a fresh look at our processes, risk management procedures, and has made us, I think overall, has made us build a stronger business.
Sure. Back when all this happened, you said you kind of froze fundraising at that time. Did that mean you had to go back to some companies who you were going to invest into and say, sorry, we can't invest in you, or sorry, it's not going to be as much as we thought it's going to be? Were you having to have those conversations?
Well, it's two aspects. One is in terms of what was happening in the market, just the market froze. So where we had co-investors, they needed to see what is happening. So in some cases, we had to provide bridges to the companies to get them to the next stage. But it's also an internal aspect, which is, hey guys, the world has just changed. The business plan you had a week ago is no longer perhaps merits a refresh. And a good example is we have a company in the smart office space, and their offering was focused on offices that were very full, and how do you manage many people in an office? Well, it became they had to pivot to the opposite. How do you make sure that there is as few people as possible in an office and in a safe environment? A few months ago, they were featured by CNN Financial News as enabling the future of the office. So I guess for us, the main takeaway was, look, we're in the venture capital space. It is about risk. It is about handling risk, and it is about, most importantly, about identifying and reacting to opportunities. And all the companies in the EIS space have that advantage. They're smaller and more nimble than the large corporates. They can react faster to these emerging opportunities.
Yeah, that's definitely been a theme, I think, of the pandemic, that small early stage companies have been the first responders, and the large corporates, the big tankers, they find it hard to move and move quickly. So it's been great to see so many EIS companies come through. And I know during the summer that you guys in particular have done a lot of M&A activity. So you've had some changes there as well. So do you want to tell us a little bit about that?
So that was our COVID project. Others learned Mandarin, but this is what we focused on. But we had an existing relationship with Net Scientific. Net Scientific is a AIM-listed company entirely focused on healthcare investment. But over the summer, it became clear that actually combining the two businesses would make a much stronger player in the UK VC scene. So the transaction that took place was Net Scientific acquired EMV Capital entirely, and now the combined entity represents a portfolio of 15 companies across, and let me know if the internet drops off, and just provides a much stronger team, stronger platform, stronger set of opportunities going forward. I think from EMV Capital side, we always wanted to build our capability in the healthcare space. Growing organically, as we all know, is takes some time, and this was a really good opportunity for us to go into the healthcare space in a big way.
Yeah, so this has made you kind of bigger, better, and able to do more investments and see more opportunities, is it?
Well, we hope it's better, but I think what it's enabled us to do is to really continue to scale our investment strategy. And a core part of that strategy, as you know, is that we don't do only EIS. We believe that EIS is an extremely valuable instrument, but it comes in its own when it's combined with other pots of money, other types of finance. What is a fact is that whether it's the EIS side of the industry or the other side of the industry, we're all looking at the same companies. These companies need funding, and the type of funding they get varies over time, whether it's because of the geographies they change, whether it's because of stage of investment. And the acquisition, the combination of Net Scientific and EMV means that we can provide a greater chunk of those needs for those companies. We can stick around with them for a longer period of time.
Yeah.
As a result, now in the extended portfolio, we have a range of companies from late seed, pre-series A stage, through growth, through to one of them is actually NASDAQ listed, and we still have a significant proportion of it, and continue to hopefully continue to add value. In turn, I guess another aspect that we've always. Oh, sorry, go on.
No, go on. Sorry, I didn't want to stop you. Go ahead.
Just in turn, another aspect of our strategy that we've been able to develop further is, I mean, many of us refer to the problem that the UK has excellent entrepreneurial talent, excellent science, excellent technological opportunities, but where things often lack are in terms of access to scalable capital, and input UK companies often leave it until too late to go international. Often they're acquired by the time they go international, and that means a lot of value is left on the table. So what we've always been trying to do is to help UK companies internationalize at an early stage. Now with this, with the Net Scientific acquisition, we've now acquired a footprint in the US, both with our portfolio there, but also the networks capabilities we have. And while our traditional strength has been in sustainability and industrials, healthcare, which of course post-pandemic is going to be another major, will continue to be a major growth area. What we've seen is that, look, I mean, there is a raft of great UK diagnostic and therapeutic companies that simply don't have access to the UK healthcare market, and these are the sorts of things that we're trying to help the UK startup scene with. And again, the combination of the two businesses has given us the resources, networks, and models to so that we can do that.
Sure. And then obviously you mentioned healthcare there. As you say, it's a real hot sector at the moment, understandably. We can all appreciate why that is. Kind of going forward and perhaps thinking of some of the companies that you're working with at the moment, do you want to give us a couple of examples of companies who are doing good things you've got high hopes for?
Sure. So, I mean, I mentioned earlier the example of PointGrab, who are developing smart analytics for the workspace, a combination of a video analytics chip and AI and integration with building systems. And what they're experiencing is, ironically, as real estate space is being shrunk, the real estate space that's being kept by corporates needs to be smarter. And this is where companies such as PointGrab have a unique opportunity to become the operating system, effectively, of the office of tomorrow. Another example is a company we recently invested in, SageTech Medical, and They hit actually two of our focus areas. They're in the healthcare space. What they do is they capture and potentially recycle anesthetic gases. Now, of course, I never knew that to be a market, but as it turns out, anesthetic gases are vastly more harmful to the environment than CO2. There's a magnitude of a difference of impact of some anesthetic gases compared to CO2. Now, of course, we can't ban them because we're not in the Middle Ages, so people need to be asleep when we cut them open. But what they're enabling hospitals to do is to reduce the CO2 impact while, of course, continuing to use what's a vitally important part of healthcare. As it happened in the context of COVID, the impact of such technologies is also around increasing the flexibility of operating theaters and ICUs. So you get to see this. We think that some of the most interesting opportunities are where sectors collide or where sectors overlap, because you get young startup companies that are flexible in their strategies and can be innovative in addition to the technology, can be innovative about the business models, whereas the market dominant corporates are not there. They're focused on verticals, and it takes them a while to figure out that, well, there is the verticals are emerging.
And a company like that, sorry, what was the name of the company that did the anesthetics?
Sage Tech Medical.
Sage Tech Medical. So it's a company like Sage Tech Medical. So you said yourself, you didn't know there's a market for anesthetics. So when that company comes to you and pitches to you and you see the investment deck, what are you looking for when you review a company like that? What are kind of the key criteria that make you say, yep, that's the one I want to put my money in?
I'm going to sound corny now, but there's a tagline on our website that says backing ambition, investing in execution. And it's not just words. Because we are here, of course, we get, like all of our peers, we get excellent deal flow, just so many good ideas and so many good teams, whether it's coming out of universities or corporate spin-outs or independent teams that have been formed. And each of those sources, of course, has their own challenges and ways of working with them. But I would say there isn't a shortage of ambitious ideas and great innovations. But what it always boils down to is execution capacity. Yeah. So yes, we look at a big market, we look at the growing market, we look at the disruptors, we look at a genuinely innovative technology, we look at the IP and all those things. But I would say those are the basics. There's nothing innovative about doing that. But in the end, what it comes down to is, does the company have a credible execution plan that's compatible with the fundraise they're asking for? Is this something that we can believe in? I should also say we're not looking for perfection. There's nothing that turns us off faster than when the deal comes and look, it's all perfect. There are no competitors, and yeah. Exit at 1,000 multiple in 2 years' time. We just don't believe in those things. It's maybe we'll miss a few. But we're comfortable with problems. What we want to have is a collaborative approach with the management of the company. Of look, how are we going to help you, and how are we going to work through these problems? What is the strategy of getting through these challenges so that you can have a successful business?
Okay, and how long does all that take? I mean, how kind of intrusive is the process? From the first day that you meet them to the day you actually put money into the company, how long does all that take, and kind of what are the steps and processes behind that?
Well, look, we make no apologies for being a hands-on investor, and I think we're more hands-on than many others. And what we tell entrepreneurs at an early stage is, look, if you're looking for passive money, that is just not us. There's many others that can provide you with that. However, we think being hands-on provides value to the businesses, and it provides also value and protection to the investors that join us on this journey. To answer your question in terms of time from first meeting to investment, it really varies. We're not chasing trains. We're not in a hurry. In some cases, it's taken us as long as 2 years to back a business. The reason we take a longer, and sometimes often it's less than 2 years, I should say. But the reason we take longer is because we know we're joining this business as a partner for a long time to come. It's not just about the EIS check and then we switch off onto the next deal. If we join a deal, we're going to try to help them succeed no matter what through some really difficult periods. If it's all on the up, probably they won't need as much of our help as we thought originally. But it's really when the company hits a significant problem that having a partner with comprehensive skill set really makes a difference. It also makes a difference to the investors because this is when excessive dilution happens. You know, the first strategy hasn't worked out. Now you have to pivot. You have to redo something. You have to redo a prototype. Before you know it, the capital requirements of the business have doubled or tripled compared to what you originally expected. So in the end, you have a successful company and an unhappy EIS investor. So we're trying to mitigate these risks.
Sure. Yeah, I guess we're trying to align the two different things and align those interests. And you talked about kind of, it's not passive money, so I guess it's kind of smart money in that sense. It's not just you throwing money at a company; it's you giving them your expertise and the contact books and the kind of the additional added benefit that you bring to those companies as well, by the sound of it.
That's correct, and it's there are the obvious things in terms of getting the finance right, and do you have is the right time to bring a CFO on board, and getting the reporting right, and so on. Again, this is just kind of the bricks and mortar of the business. Yeah. But where it gets really interesting and where we think we add value is well, actually, look, the market for you really isn't here. The market for you is in Asia or in North America, and it's going to be too expensive for you to establish kind of to crack that market with brute force, with a huge sales force there. Let's help you look for partners. And this is where our links and collaborations with various corporates globally really help. We hope help the companies get to that stage. But also, if I give an example in the healthcare market, the most profitable and largest single healthcare market in the world remains in the US. It has lots of imperfections, lots of problems, but the bottom line is that is the biggest single healthcare market in the world. And that should be a target market for many of the UK's great medtech, diagnostics, and therapeutic companies. Okay, now you just spun out of university. How long will it take you until you establish a presence in the US organically? And this is the sort of areas that we can help with the network we have, or the experience we've had, or especially the mistakes we've made with other businesses to help the new generation of companies avoid those mistakes.
Yeah, no, that's always the key learning of life, isn't it? Trying to learn from your mistakes. You talked about timing earlier in terms of it can take up to 2 years to kind of from meeting to getting the money in the company. Just to try to line that up with your investors. So how long, if I invest in the fund now, for example, how long generally does it take to get money deployed into actual companies?
Maybe if I just address the 2-year aspect first, lest we dry up of deal flow, because entrepreneurs have seen this and become horrified. So we have different ways of engaging with companies, and in some cases we can take a small step into a business, either with an EIS or a non-EIS investment, sometimes with a convertible loan, and so that we start working together and building up our knowledge of the business.
So small baby step that you take in it before going bigger, as it were, is it?
Exactly. But there was one case that it was 2 years. But from the investor side, look, we are on the, I don't say difficult because there's nothing easy in the VC space, but when deep tech emerged as a theme, and we've been in deep tech before it was fashionable, but when, I'm not sure I like the word, but when deep tech emerged as a theme, until that point, as we all know, investors had been primarily focused on digital internet sort of startups. Digitization, of course, still remains very important. It's kind of trickling its way through industrials, healthcare, and so on. But the issue that I always found when I founded EMV and its predecessor was that the issue is not lack of money. There's plenty of private money that's chasing deals. The issue is that in the internet space, the templates were there. So for better or for worse, maybe you had the illusion that, look, if I invest in 20 of these, 2 will work out, and they work out in a massive way, and then it's fine. And in our space, it's just different. A company in the sustainability space is different from a company in healthcare. Within healthcare, the way you grow a diagnostics company is totally different to the way you grow a therapeutics company. And it's just less accessible to people without knowledge of one or another sector. So to answer your question about the how long it takes, I mean, what we typically say is, look, you should be planning on a 5-year journey or longer until a company really develops its value. Having said that, and this is specific to the AI space, it's really important, in order for this space to continue to thrive, it is important to develop off-ramps for the EIS investors that come in. Some of these companies, it will take them a while to reach their full potential. And when they do, they will transform industries. They will make a big difference. but many people don't want to stick around for the full part of the journey. They would rather collect a decent return and reinvest it in the next company that's trying to transform an industry. So this is where we're looking to develop off-ramps through secondaries for EIS investors, that we give them early opportunities for liquidity. For instance, when we syndicate a later stage investment with family offices or corporate or other investors, so that earlier EIS investors have the opportunity to opportunity but not obligation to exit.
Yeah, I was gonna say, so they can either keep going on the journey with you or kind of bail out a little bit earlier if they want to get some liquidity back into their pockets.
Exactly. Yeah.
Okay. And then just last question. I guess, tax year's heading really close now. We're 20-30 days away from tax year end, and obviously we're pushing into a new tax year. What's the outlook for EMV? What are you planning? Any big initiatives coming through?
Sure. So I mean, first of all, what's been interesting, what I found interesting in our experience is that the growing of the non-EIS part of our business has led to the growth of the EIS part of our business. So they've been really feeding off each other. So it's been a great year. In terms of what's coming up on our side, the Evergreen EIS fund that we have, we're going to be relaunching it in the new tax year by extending its application in healthcare and the other sectors that we're focused on.
Yeah.
I think ESG, as we all know, has really come of its own in the last 2 years. While arguably we have always been about impact investment, given the sectors that we're focused on, and perhaps we've been a little bit more impact than some of our peers that have ESG with big letters on their websites. But what we're looking at is systematizing more the ESG criteria that we use to make such investments. I should say, very encouraging for us is that this is not only driven by our commitment to the greater good of mankind, but it's also driven by the requirements of corporate, institutional, and family office investors. This is the big change in this space, that ESG is here genuinely, I believe, not as a bubble, but as a genuine commitment by the underlying investors to that space. Now, are some people misusing it? Probably yes. But it is a genuine shift in how things are being done, and I think the final aspect in terms of how we would change things is once again really focusing on the accelerating the growth of the businesses and accelerating and making use of the transatlantic bridge that we have through this through the tie-up with Net Scientific.
It sounds like it's going to be a busy year then. So, Ilian, thank you very much. It's great to have a chat with you. If people would want to get in contact with you or learn more about the fund, they can find more on our website, and I think your open offers are on our website, so go and have a look at that. But if they want to get in contact with you, how can they go about doing that?
Absolutely. I mean, they can go through the website, or they can contact me via LinkedIn. Nick Salisbury is the head of the EIS practice, and they can also get in touch with him. And Mark, before we shut off, I also want to pay tribute to the EIS Association for being there and supporting the industry. I'm not just saying it. It's important to have a voice of support such as yourselves. It's been very tricky times, and we really believe the EIS instrument will be an important part of the post-COVID recovery of the economy.
Yeah, well, that's very kind of you to say so. Thank you very much. Yeah, we certainly feel EIS has got to play a big part going through. Now we're coming out of recovery, moving into growth. We think EIS can play a huge part there. So we're lobbying hard for that. So thank you for the kind words. Okay, Ilian, thank you very much. Good to speak to you.
Thank you, Mark. Take care. Bye.